evening, everyone. Welcome to a video on the Nifty interim update, some events to look out for, and we will end this video with a private bank investment idea that I have recently found to be an interesting one. So, let's do a Nifty 50 deep dive first to understand where we are in terms of the broader market, and what do I see as some technical levels that could be helpful in the overall analysis. So if we look at the valuations of Nifty 50, we are right now at a valuation of 22.39, which is again far away from the standard deviation 125.72 that we see as the orange band. It's a safe zone at this point, very close to the median. So that is a good sign that if we keep on dropping a little bit more and rather consolidate for a couple of months ahead of the events that are supposed to come in, it could be a very good area where new investments, new funds could be deployed. Right now, in terms of analysis, and just see the quantum of how markets start to slow down, is only 8 out of the 50 Nifty companies that we have are trading under their industry Ps, right? Every other company, which is the rest of the 42, are well above their industry Ps, well above their peers in terms of valuations. So that's where we are, and that's why I do expect some kind of a decline or a pause, which could be very helpful overall for new investors to get in. So that's on the valuations. If we look at the key support levels in Nifty 50, and this is a monthly chart, when I look at investing, I don't look at anything lower than monthly. At best, sometimes I do drop down to weekly, but that is only at entry level. But apart from that, I'm always on the monthly level looking for key support levels. So if we look at the key supports, 20,000 is a good support area, 19,000 is a good support area, and the entire range from 18,000 to 18,700 is an entirely good support area on the monthly chart. And the support areas on monthly chart do not get violated so easily with just one pierce. So it will be a good test for all kinds of shorting that is supposed to come from this point of time. Again, all those green levels marked do not mean you blindly go and start buying, but those are the levels at which I will feel comfortable that I start looking at new investment ideas. Till that point also I look for new investment ideas, but I do not deploy a lot of capital behind it. I do not deploy too much of my entire capital, and I only keep a very small part invested, just to ensure that I do not miss out on a good opportunity, right? If the overall broader Nifty comes down and if the stock that I have invested in also comes down, then it's a good price for again to kind of reaccumulate a little bit of position that was initially taken and add upon that, right? So adding up on good fundamental companies is never a problem. Averaging on mediocre companies that do not have excellent fundamentals is where the problem starts. So that's where we are on the key support levels. There are 3 or 4 big events that I see to be a trigger for the market to fall back a little bit. Again, it's not a statement that it will fall, but I do have a sense or a feeling that one of these events will trigger a sharp decline in Nifty, which will provide a good investment area once again for a more longer term sustained move. So there will be 2 monetary policies from now to the general election. So Two bi-monthly monetary policies are something to look out for. There is a fiscal budget on the 1st of Feb, so that's also going to create some bit of volatility in both Nifty and Bank Nifty. And obviously the big event of the year, which is the general elections, which again can make or break things, and we can't really say what would happen on such events because uh, the FIIs could short a really big quantity just to create panic around the event, and it can move either way. So the preparation has to be to stay away from big commitments at the moment, and look for only those investment opportunities that are very well read, very well researched, and that will hold steady against all the volatility, in my opinion. Uh, Now, what will follow during the time that you will see now for the next 3 or 4 months until we have all these big events passing by is, first of all, you will, if truly the Nifty is bound to decline, you will start seeing great news everywhere, right? A picture around how all the financials and markets and every company is doing excellent is what will be portrayed in the broader media. Most broking houses that you will get emails from, promotions from, messages from, calls about buying a certain stock, you will, if you go and see, most of those recommendations will be to promote expensive stocks in terms of valuations. No doubt they'll be fantastic fundamental companies, but they would have gone a long way ahead in the valuation, and it is just going to get you into the situation where you make hardly 15-20% at best. You try to hold on to it, and then the broader markets turn against you, and then you're suddenly in a 35% loss on that stock. So that those are the kinds of stocks that I believe will start getting promoted. I'm already seeing that on most big brokerage firms in India, and obviously I don't blame them because it is their business to attract liquidity of the retail. It is their business to lure people into such stocks, and people are there who would love to invest in such stocks, and I'm completely okay with that as long as they have signed up for the risk. And the third part is the use of triggers will happen, which is basically the events where they will try to bring the market down suddenly on a particular event day, or that whole event week, or even the event month, and bring their own positions back in, long positions back in, and then take the markets higher, which I believe is a very likely scenario looking at where we are currently. But let's see, again, I'm not calling the markets higher or lower. I am prepared to act basis wherever the markets are structured to go from here. So that's the broader plan, in my opinion. Now, that was Nifty 50, a quick deep dive. Let's look at the private bank investment idea that I've been talking about. Now, first of all, the entire private banking sector right now is overvalued in terms of the valuations, in terms of their prices as compared to their EPS growth or earnings growth. They are all overvalued. But I was able to find only 5 stocks from the private sector banking which to me are in a good shape in terms of valuations. But when I started looking at each of these stocks, I kind of started curtailing them down from the list. Now, the first one was Karnataka Bank. If you look at the CMP, this is right now at almost near the all-time high, and I do not want to buy any such stock which is at all-time high at this point. The South Indian Bank, if we look at it, has a debt of almost 15 times of their deposits, and it has a ROE of only 12. Now, if you compare that with someone like Ujjivan for Small Finance Bank, they have a debt of 7 times, but they are still making 33%. But if you look at Karnataka Bank, it's at all-time high. Ujjivan Small Finance is at all-time high. South Indian Bank is very highly leveraged. DCB Bank is making way too low ROE as compared to the other banks. So there's only one bank that fits the bill in my opinion, which is the Tamil Nadu Mercantile Bank. Now look at the debt to equity, it's less than 7, but they're still making 16 to 17% of ROE every single year. Now that is not a joke, this is directly comparable with HDFC Bank. But right now if you look at HDFC Bank's PE, it's close to 16 or 17, and that's why you're seeing the kind of decline that you saw in HDFC Bank a couple of days ago, that it just moved 7 or 8% down from where it was. And it is just natural, does not mean that that company has lost the sheen. It's just that it's overvalued. The steam will go off and then it will come back again, and the steam shifts from one stock to the other. Now the shift I see is in Tamil Nadu Mercantile Bank, right? With that view in mind, that's the private banking investment idea for today, which is the TNC bank, right? So basically what I see is they are, in my opinion, they're 100% fairly valued at this point. The return on equity is close to 16%, and the most important part that I look for banks is the net NPA. The net NPA is hardly 0.6% of the entire portfolio that they have lent out, which in 2019 was close to 2.5% of the entire portfolio. So imagine the kind of improvement that has happened in the net NPA handling, right? And that's why I believe that this is one company that will go miles from here, looking at their strong fundamentals and looking at the valuations they are at. So that's pretty much what I had to cover today. Again, please be aware that none of my investment ideas teaching are a direct response to you buying or selling them. When you buy or sell them, make sure you take the ownership of the decision that you have taken without putting blames on anyone who has recommended it to you or anyone who has spoken about it to you. Learn to be accountable. That will take you a long way. Until I see you next time, I wish you good luck and good investing. Bye bye.